Good morning, this is Connor from 0DTE Traders here to present our market minute for September 27th, 2024. It is 10:15 and the SPX is trading higher, up 0.1%, 257.53. It is fairly muted out here today, pinned to that 57.50 JP Morgan strike. This is massive in terms of gamma. Now we are holding above it here, putting in a bit of a pivot at this time. So perhaps if we get further upside, a target is going to be back to yesterday's high. That is the all-time high of 57.67, 57.70, which is SPY 575. That is the call wall, very big level, followed by 57.75. So this is a pretty hefty zone up here in terms of resistance and logical upside target if we do get continuation. Now, if we do break down here below 57.50, this short-term structure, it's going to open the door down to 57.25, 57.20, which is quite critical today. This is also more or less going to coincide with this upsloping structure. Now, the more times you test a level, the more times you test a structure, the more prone it is to break. So this is one test, 2, 3, 4, 5. If we test it again, it would be a 6th test. And a break of this zone would be a bearish indication with a move down to 5,700, 56.95, which is our flip. That's going to be quite the move today. Not really seeing any indications for a move of that magnitude at this time, but things can change quite quickly. Popping over to market internals, ADD is positive, plus 1,600. IWM outperforming, up 1.1%. Now, what is preventing upside continuation at this time is the underperformance in growth mega caps. Qs down 0.2%. Megs going green to red, now down 0.2%. So we're seeing a loss of momentum there, very similar to what we saw yesterday morning. VIX, a measure of market volatility, is flat. This has really been the theme this week. VIX just basing sideways around that 15 handle. Vol is going to continue to be a good cue for a sharp downside move. So we're continuing to look at that as an indication of risk off. In terms of gamma, the SPX remains well supported. Strong positive gamma environment, plus 900 million notional. Trading above the flip of 56.95. That is our transition below into negative gamma, where we would anticipate higher volatility, both implied and realized. 57.50 remains the big standout strike. This is the JP Morgan short call trade set to expire on September 30th. This has influenced the price action this week, essentially killing volatility and invoking mean reversion action. That could very well be the case today with pinning potential into that roll date. We did close just shy of that yesterday at 57.45. Now on the upside beyond that, 57.70, 57.70 is that next resistance zone, followed by 5800. On the downside, below 57.25, these strikes turn negative to about 5,700, meaning we could see increased velocity in that zone. And that will also coincide with a break of that structure. So if that does occur, maybe not today, but perhaps next week, there could be a very good short momentum trade there. Now, positive gamma is characterized by lower volatility, mean reversion price action, and a supportive market. And this is largely a function of how dealers hedge their position when you're in positive gamma, so above the zero line. Dealers buy dips, they sell rips, which creates that mean reversion effect, and why buying the dip is so effective in this environment. When you're in negative gamma below the zero line, the opposite occurs. Dealers sell weakness, they buy strength, which exacerbates volatility in both directions. And we clearly see that reflected here in the SPX return distribution. On the x-axis is the SPX gamma index. So essentially this chart here, which with each bar representing a day. On the y-axis, we have the SPX percentage change. Okay, zero line right here in the middle. So the higher that gamma index, the lower that return distribution. The lower that gamma index, the wider that return distribution. And we're sitting somewhere around 900 here today. So you can see historically very low volatility. Now, come next week, at the end of the month, when we get the removal of that JP Morgan short call at 57.50, we are going to see a reduction in positive gamma, a removal of some of the supportive flows, which should allow the market to move a little bit more freely, perhaps get that next directional move. We have a common saying here: when we are above the flip, buy the dip, below the flip, sell the rip. So I'm just going to go over to the chart here this week, and I'll show you the buy the dip setups that we were trading in this positive gamma market. We are looking at the SPX chart on the 5-minute time frame, and the flip currently sits at 56.95. Okay, so above positive gamma, below negative gamma. Now this does change day to day, and it has been shifting higher, although we've remained above the flip every day for the past 2 weeks, meaning buy the dip regime. Now, unless it's very bearish, you have that spike in the VIX, internals are materially negative, our primary setup is going to be that buy the dip. So it just comes to really timing that trade. And I would say we look at two variables. We're looking at levels first and foremost. Now we utilize gamma to determine where that demand is going to come in. We also utilize structure, which is quite common, upsloping, downsloping trend lines, etc., as well as 0DTE options positioning. But essentially, we're looking for some sort of anchor point where there is demand and probability to support a bounce. Second variable, cycles. So we utilize momentum cycles, overbought, oversold, and this is our DSS cycle indicator. So we start to become interested in a dip buy when we enter that oversold territory. Now, that doesn't imply you buy the dip. It's just a prompt for a potential action. But essentially, we're looking for an alignment of these two with supportive market conditions to look for a bounce. And we've had a number of them this week. Matter of fact, they've all played out quite well. This is Friday, so this is last Friday, not this week, but this was the option expiration. Very nice buy for mean reversion, double cycle low, support. I mean, you can basically see every time we get into that oversold territory, the market stages a bounce. It's because flows are coming into the market on those dips, which increases the probability of them materializing. You can see you don't spend a whole lot of time in that oversold territory, right? You tend to get bought up quite quickly, and very big one here yesterday, a reversion to 57.50. So this is the primary trade when trading above the flip, but there is also very good short opportunities. But something very important is before you put on any trade, it's always best to classify, is it a trending trade or is it a counter trend trade? Because you may approach it a little bit differently. But equally here, these have worked out quite well for shorts, just essentially playing the mean reversion. 70% of the time, the market mean reverts. So this works more often than not. Now, 30% of the time, the market trends, and the market could stay overbought or oversold. So it's important to identify those conditions and not trying to play the counter, actually waiting, if the market is in a strong uptrend, waiting for that cycle low to participate. Or if it's a really strong trend and you want to jump in, simply drop the time frame to get into the market. Now, I would only recommend the 1-minute time frame is if there's strong directional momentum. Otherwise, you could very well get chopped up, right? So the higher the time frame, the more significance. Lastly, let's do a quick performance check. This is my first week back from vacation. I was gone for about a week and a half, so just easing back into things. I took a total of 6 trades, 5 winners, 1 loser, for a total profit of $4,162. Now, this doesn't include today. I did take a couple trades today, but very small gains, up $200 on the day. There's just no volatility at this time. But my trades this week centered around 57.50, no surprise. So early in the week, I was short 57.50, called credit spreads, which played out well. And then Thursday, so yesterday, I'm moving into sort of long vol strategies, anticipating a test pin into, well, the end of the week here, which has played out thus far. So long call, long butterfly, and these were some nice winners yesterday. 500% ROI, 260% ROI. My only loss is a bull call spread. I really haven't traded a lot of debit spreads on 0DTE, so this is something I'm kind of playing with around midday, looking for those midday pivots. It was a very small loss, 35 per contract, but it is a loss. Anyways, that's my trades. They are posted within our Discord, and all trades follow a systematic process. There is a reasoning behind every action. So if you do want to learn how to trade 0DTE like a professional, you want to join the team, trade alongside me, visit the website at 0DTEtraders.com and join the team today.